Welcome to our 3Blocks short series on the secrets of PA reporting. Today I would like to talk about different accounting methods for the PA model. One of the challenges we face on the implementation of IFRS 17 is how to structure a chart of accounts. On one hand, the standard prescribes certain ways of calculation. On the other hand, we'd like to minimize the number of changes done to current accounts. Plus, we are used to certain naming convention like UPR or DAC. Today I'd like to show you different possibilities to approach creation of chart of accounts. As an example, we'll look at insurance contract liabilities, but a similar thing can be applied to reinsurance. First, let's focus on how we currently book insurance transactions under IFRS 4. Under the current standard, we have several accounts to book insurance-related transactions. For instance, when we write premium, we have UPR on liability side, we have receivables on asset side, and we have gross written premium and delta liabilities in income statement. Similarly, for acquisition costs, we do account for DAC, payables, and acquisition cost in P&L. So after the closure of reporting period, we account for accruals, cash flows, and revenue or costs. Now let's look at the IFRS 17 possibilities. I'm going to show you three options. First is the simplest and follows directly IFRS 17 PA calculation. The calculation is based on payments, so there is no place for accruals. There is no booking for written premium. Everything is accounted for under liability for remaining coverage. As companies would like to trace receivables and payables, these would then be stored as off-balance sheet items. In the second approach, we try to align liability accounts with the current standard. We allow for UPR, DAC, receivables, and payables. This way, the receivables and payables are included in the general ledger as separate accounts. There is no direct account for liability for remaining coverage. However, it's a sum of the four accounts. And there is one more option that is similar. However, we included more detailed split of revenue account, which is split into gross written premium and delta liabilities. The last one is a replica of IFRS 4. To conclude, we could construct our chart of accounts based on the simplest option, where we have just the base accounts. Alternatively, we could utilize the accounts used currently, like UPR or DAC. Now, I would like to show you how the 3Blocks PA tool accommodates all these options. One of the outputs of the tool is Excel-based disclosures, including all required tables, chart of accounts, and journal entries. You can easily predefine your chart of accounts, and the tool will produce the outputs according to desired structure. One of the options is to produce a simplified chart of accounts where insurance contract liabilities are booked on three base accounts: liability for remaining coverage loss component, liability for remaining coverage excluding loss component, liability for remaining coverage pre-coverage acquisition cash flows, and the insurance revenue is one account. Similarly, on the reinsurance side, we have just the base accounts. If you're interested in the other options, we can look at the second possibility. In this case, we have 7 accounts for liability for remaining coverage. Apart from loss component and pre-coverage cash flows, we have UPR and DAC, receivables and payables. Here, the revenue account is still one account. But we could also split the revenue account. Let me show you the last possibility. The liability for remaining coverage is the same as before, but the revenue account is split into gross written premium and delta liabilities. So it's really up to you which method you choose. When the chart of accounts is set and account numbers are updated, the tool will generate journal entries. It can be done on portfolio level or any lower or high level. As part of the output report, we also include useful management information like the dashboard, the KPIs, or portfolio statistics, which are all flexible and can be customized. We also include the required IFRS 17 tables, notes, and reconciliations. Interested? Contact us for more details. Thank you.